All right, it is time now for Grade My Trade. And your first trade comes from Chris, who bought the SMH Semiconductor ETF at $215.22. Now, Jim, you do not own the SMH, but you do own NXP and Qualcomm. Chris, apparently right now underwater on the SMH trade. What is your take? What is your grade?
Well, look, let's give the grade a B. I think you're supposed to own the semis, but more than the grade, I just want to encourage Chris to stick with it. The only reason it's not an A is because, same for me with the semis I own, it's down, right? But I think at the end of the day, with either the index, the ETF, or the individual companies, you got to realize these are real companies producing real products, and they have positive cash flows. These aren't sort of fly-by-night companies that are designing products that'll come out 5 years from now, or companies that have no earnings and are trading on price to sales. These are, for the most part, attractively priced real companies. So just stick it out, Chris.
Joe, you got a take on the semis or the SMH trade?
Well, I think, first of all, for Chris, I agree with Jim. I like, obviously, he's taken a diversified approach by purchasing the ETF, and that indicates he wants to have a little bit of a longer-term ownership. I said last week on the show, I think there are stocks within the semis that have clearly bottomed, and I think there are others that are still going to experience stress and strain. You could see that with Marvell, you could see that with Intel, and you could even see that to a certain extent with AMD. KLA Corp, Microchip, onsemi. These are examples of stocks individually that I believe are going to work and have seen the worst. And more recently, at the end of October, I purchased personally Texas Instruments at 161. So I'm taking a little bit of more of a tactical approach. But for Chris, I like that he's got that diversified ETF ownership. And he's got to make sure that he's disciplined and stays committed to the long term and doesn't try and trade around it.
All right, let's move on. Dave in California bought Danaher in early November at around $241 per share. All right, Shannon and Surratt, you both own DHR, one of the quietest companies, I think, for its size in the United States. Shannon, first to you. Old Dave's up a little bit. How would you grade this trade?
Yeah, I give this an A-. I think that there is a significant tailwind right now for Danaher in terms of respiratory testing. We're obviously in the midst of an incredibly challenging flu, COVID, RSV season, and that's going to benefit them. But this is a diversified life sciences and diagnostics company. They have continued to be very methodical and prescriptive about acquisitions. And I think, to your point, Brian, this company flies under the radar, and yet it's in a space that we think, from a healthcare perspective, is a good name to hold into 2023.
Surratt?
I like the company, too. I mean, you just have to be careful about the comps that come through. But again, because of the testing that we're having again with COVID kind of here, China, et cetera. Another company in there is Thermo Fisher. So I do like these companies. I think they are defensive. Just be careful that they're not cheap companies, so that when the market comes back, these things could come back.
All right, Dave and Chris, thank you for sending in your trades. Everybody out there, keep your trade ideas coming in.